open gym session one day, walk in, and I want to see people just looking at charts. That'll make my day.
Honestly.
All right, let's get started. Okay, so can you still see my screen?
Yeah.
Okay, so we have a little journal here. Just go to docs, backtesting journal. We're gonna clear our journal from last time. It was quite a successful. Oh, I need to switch account. What do you mean? View only. I am the owner. Oh. Okay, there we go. So on our journal, we've got that lined up. Okay, let's get started. So what are we looking at? This is the 4 hour. We're in a bit of a range. Broke these areas of kind of like lows, so we've caused a bit of a break of structure. There was a bit of liquidity lying above these sorts of highs, so I'm going to mark that up as liquidity. I believe, yeah, so this is actually a liquidity sweep now because we've gone through it, so I can mark that up as a sweep. Break of structure, and now zooming in on the 4 hour time frame, we can see this area as a point of interest, and I can see this area as a point of interest. Now, some people would ask the question, why enter off of this area as opposed to enter off of this area, or why enter at this area as opposed to the other area? Reason being, firstly, we have imbalance, right? We have imbalance. Imbalance is a place where there's a wick, an impulse move, and then another wick, yet there's a gap between them, right? So over here, if we look at these two candles, these three candles, this candle, and this candle, we can notice we've had this some sort of move, had this impulse move that broke this low, but can you see this upper wick has retraced, and this low over here and this high over here overlap. Therefore, there's no imbalance. The imbalance has been filled. However, there still lies an imbalance between this wick and that wick. So that's another imbalance area. And then essentially, we are in an area where we've had that break of structure, but I would look to initially enter off of this area because this is the candlestick or the order block that has caused the break of structure. It is the last green candle before the red move that broke this structure. Same over here. It's a bit of structure broken. That was the green candle that caused it. You could say it was this candle, but this range engulfs this range anyway. So if I was to mark up this green candle, you'd be able to see that overlaps it anyway. So we can just mark up the wider zone. Now let's drop onto our 15 minutes, see what we can look at. Initially, we'd actually want to stay on our 4 hour and watch how price reacts. So this is how we're going to do it. So we play it out, wait for price to get to that level, to that order block. Keep in mind that order block kind of lines up with a lot of structure here, here. So it could be a nice order block. Do we ever get there is the question, or do we just drop? Okay, over range, nice signs. Now what I'm seeing is liquidity formed, right? I'll show you this area, and even this area. This whole area is liquidity. Liquidity acts as a I can't speak today. Liquidity acts as a place where price should break through but doesn't have to. Imbalance acts as a place where price should get to and fill, and has to do so. So liquidity is usually a good sign for there to be a grab. So just marking up this 4 hour, we can see that liquidity is formed again over here. That includes the liquidity. So we can kind of mark up this whole area as liquidity. So what I expect is regardless of where price goes right now, it will still go up and grab this area of liquidity over here. And because there's an order block above it, it usually will test our order block and then come back down because it's grabbed that liquidity already. So let's watch out. There we go. Have we grabbed liquidity just yet? Let's just extend that zone. Oh, we've just created more liquidity. So it is a very, very keen zone to look at. And I am just going to see where we can take this. So we've had that liquidity formed. Price has just moved and broken these lows. And as you can see, this range here that we've had, it's broken the low of this range. So what caused that break of this low? If we look to the right, it was this order block candle. However, because there's liquidity above these highs, this isn't a valid entry. We need to wait for price to break up there if we want to take 4-hour sells. Now look at new structure formed. So there was structure. What broke that? This order block here. There's new structure here. What broke that? That order block here. New structure, order block. Now we want to wait for price to essentially retest one of our order blocks. And what I'm seeing really nice and clearly over here is an order block. Another one here. Another one here. However, let's look carefully. Why is it that this order block probably won't get tested? Reason being is that a supply chain was formed, forming this green order block. We moved off. As you can see, this order block here is testing off of this order block here, which means it's mitigated. So chances are, if we do get back there, there will be a big move, but chances of us getting back there is very low. Now we're ranging a bit. Nice to see that, because that usually means price is going to change direction. So again, we're still in the 4-hour. Okay, now look, have we tapped into our zone? Not just yet. We want to wait for a rejection of our zone. There we go, before dropping to the 15-minute to look for entries. Now we have this range here, and we can focus on this range because we've seen the rejection. It's all price action. The strategy is all price action based. Now, as you can see, there's lows here forming liquidity. We want to see a break of those lows. So I'm going to extend our liquidity line to the right just to wait for a break of structure. But that doesn't mean there's liquidity here. It just means the liquidity is there. So let's just wait for a break. There we go, a break. Now a retest of what caused the break would be nice. So yeah, a retest of this area here. That's the area I'm looking at. Again, it's a 15-minute zone. So now let's wait for it to retest and reject. There we go, nice. Now let's move to the 1 minute. Now look at this. Look at this clean order block there. Should price get back there, that will be a very nice trade. About 605. Stops about 2.5 pips. We don't know where targets are yet. Okay, now we do. Target will be this low. So it's 6.32 risk to reward. Let's see if this trade does occur. We are coming up nice. Haven't broken lower structure yet. We are still coming up. Okay, now look at this. We form these equal highs over here as liquidity. Liquidity is such an important concept to grasp. We've now grabbed that liquidity slightly, but I want to see a clean break of that liquidity. It's the same model I showed you on the 4-hour when I was talking about liquidity being formed here. Price will grab liquidity and come down. We can see that same move on the 1 minute. Order block formed, liquidity formed, price will grab liquidity to the order block and come down. So this is what we're looking at in terms of the trade. Remember, we want to keep strong. We don't want to enter at any level except our designated level. So I'd be in this trade. So now I can mark that up. Entry date would have been 5th of May. Stop loss was 2.5 pips. Before screenshot there. Now we've broken structure, this structure here. So what I'm going to do is mark that up as break even. So our stop loss should now be at break even because we've broken previous structure. That means if we come back to entry, the trade will close. Stop loss is there. I'm just going to widen the trade just to let it play out. Okay. However, we also formed a new order block here for potential re-entries. Okay, so I'm going to move that zone there to where it mitigated from. We've got a potential order. I'm just going to make this place just a bit more clear to see. We've got another area which you can potentially enter off of. So now I've marked up this trade so far, and I'm also going to set a limit for this trade at this point around 85. Stops around 3 pips. Target will be the exact same target. 4.7 it seems. There we go. So this will be our next trade should we tap in. So we've broken structure cleanly. Coming back up, fine by me. Okay. Now this trade is invalid because we've already got to our take profit level. So I can remove this zone. And look at that. That would have been 6.32 off of this trade. So now we mark that up. 6.32. Our exit date was also the 5th of May. Our result was a win. And look, we entered at 8:58, so well within a really ideal time, the morning of a trading day. After 7 a.m. and before 4 p.m. is ideal. And we exited on, wow, it was an 11-minute trade. So in 11 minutes, you've made 6.32 off. That's really clean for me. And this is the whole strategy and what we base it on. We would have been risk-free once we got to that point. So once we got to this break of structure point, we would have been already 2% up and risk-free. So you would have been, if that was a 100K account, you would have been looking at £2,000 up with 0 risk. And your overall result would have been 6,320. You would have taken 80% of that because FTMO would have kept 20. So you would have lost about 1/5 of that. So you would have lost 1.26%. So you'd still be looking at around 5.08%, 5.08%, something along those lines. I think it's 5.08. So over 5% you're looking at on a funded account, right? So it's the importance of risk management. And we've just done that off of one play. So now I'm going to actually keep this analysis because this is still a potential area of re-entry. I'm going to remark the trade. I want to see this structure get broken before I consider that trade though. So because this is liquidity as well as equal lows. So there we go. Now this trade is valid. So once I start to see it move up, there we go. Now I can put my target at this low. That break of structure was a sign of weakness for me, right, more than anything. So that's how I know that price has the intention of moving back down. Okay, that was an inducement. So a lot of liquidity was formed here. There we go, we're in. So I'm going to mark that up on the chart. It was Euro US dollar and it's a short. Entry date would have been 5th of May. Still well within our trading hours. Stop loss in pips, 3 pips. We don't know if it's a win. We don't know the exit date yet. Okay, let's play it out. Remember, this is the 1 minute, but there's also imbalance to fill here. So chances are price needs to come down. So once we fill that imbalance, that's when I'll put my stop loss at entry. Okay, that's a loss. So we mark up the loss. We assume 1% risk, right, when backtesting. Now let's see where we've gone wrong. Bit of a range. Okay, we should have waited for a range. So let's kind of see what we can do to still stay in the trade, like as in get back into a trade because this trade is still valid. Now there's a range, so let's wait for a break. Okay, we broke structure to both sides. There we go. Nothing too clean for me. However, I could have potentially been looking at a trade there. With that, as you can see. Okay. Potentially, we could be looking at a trade here. The reason I wouldn't take it is because this low hasn't broken this structure. So chances are that happens. You just take out the liquidity. So let's see what we could do. Let's go to a 3 minute. Okay, we're looking at a 3 minute wick here. Okay, let's mark up the wick. Wicks usually mean there's liquidity in them. So let's use this as an order block. So let's try that. This isn't a trade I've actually taken in real life because I wouldn't have seen it coming. Should this play out as it does, this is a trade I would take though. Essentially, what I needed to see was that wick being completely filled. And it's even broken, forming a new kind of area. So this area is a potential entry zone because one, it's in our 15-minute point of interest. Two, because we've had that break of structure here on the 1 minute time frame. So that's a valid entry zone. So let's mark this up. 3 pip stop target should be here, but I'm ambitious when it comes to trading. I believe there's a huge imbalance here to fill. I'm going to mark it up like risky, but like that, because I'm going to move stops to break even should it enter in. Okay, we broke structure. That could mean the move will just has already started. So I'll just mark that up. I will place a trade should we come here because it could mean the move has already started and that will have the same target. So let's see what enters in. Okay, we've broken structure. Now, these trades are both invalid. Why? Because there's order blocks formed which broke the structure. So let me get rid of this. I'm going to keep the zones up actually, just to show you guys. And then this would be my order block. This is where I'm entering. Should price get there? I believe we did actually take this trade midweek. Target. Yeah, it's a 3.4 risk to reward. I'm going to be a bit ambitious with it and see where liquidity lies. The only issue I have with pick my take profit as far down as it is the fact that there's a clean demand zone here, which caused the break of structure to the upside. However, again, we shouldn't be scared of taking these trades because we're going to move our stops to break even. So let's see how this goes. Okay, so we're in. What date is it? 5th. Chances are we'll get out the 5th as well. So I'm just going to mark this up as 5th. Stop loss was 2.5 pips. Don't know if it's win or loss yet. Let's play out. Okay. Stop loss it. That's minus 1%. Oh, it seems that this loss was marked up as 1% by accident. -1. There you go. Okay. Again, that's a zone. Keep in mind, at this point, yes, we would have entered into this trade, but we would have also had our limit set here. Should price just move off, and same target, we are targeting this low. So that would have been another trade. Stop loss 2.5 pips again. Again, I assume the same. Let's play out. I would have entered there. Now below, by this point, our stops are at break even. Keep that in mind because we've broken this low for forming new structure. So this is our new stop loss. Okay, at this point, we've formed this kind of chain. Now, it could be valid to move our stops to above this high. However, there's imbalance here, which means price could come back up as it doesn't. There we go. There's our trade. Win 7.96. I believe we did take a trade along these lines this week, that kind of structure. So now after trading 1 day, 4 trades, you're 12.28% up. Keep in mind, we target 20% a month. It's more than easily achievable to hit 20% a month with this strategy. We're looking at 5% a week on average if your expectations are low, but you could be hitting 50% months provided you take all the necessary and all the good setups. It's just a case of being careful with what kind of setups you're looking at. So I'm going to keep those. This zone's been mitigated, so I'll just mark it out where it's been mitigated. Keep in mind that could be an inducement for this area. So we need to still keep in mind that price could shoot back up, grab into this area, and we could have a potential trade on there. Clearly not. So back to our 15-minute time frame. Now let's see, what are we looking at? We are looking at this sort of order block over here. So let's play it out. Bit of a range, nice to see. Huge liquidity wick. This is an area where I wouldn't be looking to enter because of the amount of liquidity there is. We could have a shoot up or a shoot down, and clearly it's a shoot down. Now that we've broken the wick, I can look to enter off of the order block that caused the break of structure. Again, over here, keep in mind, we still have this 15-minute area due to imbalance caused over here. So let's see what happens. Range, possibly? Inducement? Okay, let's see a rejection from that area. I need to see a clean rejection. No clean rejection. Bit of a range. There we go. Now is our clean rejection, right? Now I can drop. Now I can just mark up this order block, which caused a rejection, which caused that break of structure. Just for the 1 minute. And as you can see, that was a huge range, and we broke structure here. We marked up that area, and we are looking to enter off of this order block. Should price go there? Inducement potentially. 380, 3 pip stop. Target we don't know until we start to see that move up. Okay, there's our target. Price ever gets to our entry level. there in. So now I can mark that up as a trade. Was this on the 5th? This was on the 6th. Now let's watch it play out. Okay, keep in mind, we've broken a few points of structure now. So our stop would officially be at break even. Just let it play. Hopefully the move down continues. There we go. Take profit hit, 7.43. Win, stop loss of 3 pips. There we go. So again, two days of trading, and we haven't even completed the 6th. Where there still might be more trades on the 6th. 19.71%, 60% win rate. This would have been opened at around 4 or 5 a.m. in the morning, closed at around 7 a.m. in the morning. So before your general work day, you could have been sitting at about, let's say you're trading a 100K account, 19,700. My maths right now. Yeah, just 19.71 times. 19,710. There you go. So that's kind of what we're looking at. Now back to the 15-minute. I'm just going to finish the 6th. That'll be 2 days worth of trading that we just did. I'm just going to delete these smaller irrelevant zones. Okay, that was a mitigation there. Okay, order block still there. Okay. So now that we marked that out. Okay, now I want to see on the 15-minute, as you can see, it's a bit of a range. However, I want to see, because of all this liquidity, it's been grabbed over here. I want to see buys, okay? Could we potentially be looking at buys of this area? Potentially, yeah. Let's see. So we've had that rejection. I want to see a 15-minute rejection, which we have not seen. Therefore, we're still in selling mode. Broke structure, clean order block formed. Very clean. I'm really impressed with that. And that's going to be my bias for the market trade. There we go. You see a rejection? There we go. Now drop to our 1 minute. Have we broken any structure? Have to be very careful with that. You could say that's a break of structure, but I'm not going to take that trade in real life. I know to stick to what is clear, as if it's not clear, it probably isn't there. That's my kind of rule when it comes to trading. I need to see that low get broken for a retest of anything for me to even consider trading. And this is why we don't look to take sells. There's nothing clear. Keep in mind these backtesting calls, I don't pre-rehearse what I'm going to say. This is just, we jump straight onto the charts and we trade it out. So yeah, so we've had this kind of supply formed that broke this structure here. We mitigated off this area, came down, we didn't form a new low there, kind of came up, it didn't test this kind of imbalance area, and we've dropped, right? Now we've just spiked up. Was there liquidity potentially above these highs for price to spike up like that? Potentially, yes. But now on the 15-minute, all I'm seeing is a bit of a range. Remember, we still have this selling order block here. We have that break of structure, which we can consider to be our sign of weakness. We can consider all this area to be liquidity as an inducement. Let's see us test into this order block and reject. And you see an impulse move. There we go. Now we can look to enter off of what caused this huge potential break. So on the 15-minute, I'm just looking at this. There's nothing clearer. It's clear to me as day that this is our area we're looking at. Now, in terms of what we're looking at is in most recent structure, looking at this. So that'll be my area. Nice range at the bottom. Okay. Now, this is something which is a really fine line. Is you're walking on ice when you come to this sort of territory. But once you get more experience in the market, if you're looking to target a sell over here, you could look at this as the demand zone to retest on the smaller time frame, to retest the higher time frame. So we could possibly, but very riskily, I know that's not a word, but you get what I mean when I'm talking about it's high risk. And we could look to, I'm going to target this area of structure. So that's kind of a potential trade. It's only a 3.69. So I wouldn't actually look to trade that in real life. Again, it's just, that's exactly why. We didn't see any sort of, yes, we had this marked up, but we didn't set any sort of limit due to the fact that there's imbalance here. Now I'm going to mark up this zone, potential entry. You have tested off of it. Then try out your rounded numbers. Stop loss 3 pips. Target, we can target right down at this area of demand. 6.87 restored. Now let's mark that up on our chart. It's probably going to be the last trade we take for today. Entry on 6th of May. Yeah, 1 p.m. New York session. There's no reason why we wouldn't take this trade. Stop loss, we're looking at 3 pips. Now let's see it play out. Wow. Oh, that's incredible. One minute, within 1 minute, you would have made 6.87. Oh.
But would you be able to do this at the moment live, you know?
Would you be able to do this at the moment due to the speed of the trades?
Yeah, because if you have to like calculate this app like when it's happening, you only have like 1 minute, less than a minute to calculate. Would this be realistic? Well, now we could just see it for a few minutes and look at it, but in reality,
yes.
Would you be able to get
Yes, it would be realistic to carry out in real life. I'll talk to you about that now.
Okay.
So in real life, we're talking about these 15% zones and then those 1 minute breaks of structure. Now, even on the 1 minute, you have this order block, this order block, this order block, which is mitigated. You have potential order blocks, potential areas where you can look to enter in the market. What you'd actually look to do in real life is set a limit there, set a limit there. And then, so for example, you'd set those limits like there. Once to be honest, you'd probably set those limits there once you've seen that break of structure. And then maybe you haven't seen that break of structure. Maybe it's not clear to you. Maybe you want to wait for a second break of structure. So maybe you'd set it there and you see this structure get broken. So now you'd look at your order blocks and they're within the higher time frame 15-minute order block. You look at these 1 minute order blocks. You'd set a sell limit there. This is how it would look if you were to analyze it live. You'd set a sell limit there. You'd set a sell limit there. You don't know where your target is just yet. So you just leave it open right now and look to see where price comes back from. Now look, you'd be playing out, the market would be playing out 1 candle every minute. There, you would have lost this trade. However, because the limits are set, you would have tagged into this trade, right? But the reason I said I didn't set a limit there is because I was waiting for what's called an inducement. An inducement is an area where price either ranges, there's some sort of liquidity formed. So for example, I could give you an example of, I could give you an example of over here. You can see that we've kind of dropped down, come back up, and there's an order block here. I'll show you. However, you wouldn't have entered off of this. Reason being, it's an inducement, right? And I know it's an inducement is the reason being is because it's the first area off of that reaction zone that breaks structure. As you can see the structure here, which is broken by this, which is reacted off of this. So it reacts off of that, breaks. But then it comes back down after forming that inducement. We've taken out that inducement and we've actually entered here where you should have entered after seeing the inducement. That's how liquidity traders get trapped, because they enter off of the inducements rather than the actual zones. So that would have been an inducement, that's a zone. So you would have bought there, and then obviously you wouldn't have caught this whole move because you would have been targeting probably this high. But yeah, so reason being, I was waiting for an inducement. There was no inducement. Yes, you could call this an inducement, but it's not clear because it hasn't broken any liquidity wicks. This is a liquidity wick. I needed to see this wick break. And as you can see, that's why I wouldn't have set this limit. I would have set this limit over here and that would have occurred. And that's exactly why you would be able to enter in the trades, because you would have set limits in advance. And of course, your target, let's go back in time. In terms of your actual target, you'd be targeting areas of structure. So that on the 15-minute, you can see.
Yeah, I think I get it now a little bit more. Thanks. Yeah.
Yes.
Karen.
Perfect. Okay. Yeah, so essentially with this trade, it played out because we would have set limits. So this would have been a successful trade. We saw the inducement. It was a win. It was a 6.87 R trade. Yes, it rounds up, but it doesn't actually round up here because if I click on it, it's still at 6.87. So now our strike rate is a bit higher, but essentially I consider a good strike rate to be above 50% with this strategy. If you're doing this, carrying out the strategy and you're only hitting 49% and under, you might not be doing it as accurately as you could. If you are following the strategy to perfection, however, you should be hitting around the 75% or at least 65% plus R, but it doesn't matter. No, not R, sorry, strike rate, 67% strike rate. The reason it's quite low is because, as you can see, we've taken 1, 2, 3, we've taken 6 trades here. We've hit 4 of them have hit take profit, 2 of them we've lost out on. Like for example, this one, it just spiked through. Again, there was no inducement here. However, this area acted as an inducement, and so did this as a liquidity grab, and then we grabbed into that, and that we essentially took that trade. But yeah, essentially you do want to have that strike rate of over 50%. It's really important to ensure. I consider anything below kind of 30% to be luck when it comes to trading. If you're hitting less than 30% in terms of your strike rate, at that point, you're probably just someone who's getting really lucky. If you actually want to be making money consistently from the markets, your strike rate should be 50% and above. Okay, so as you can see, importance of order blocks, higher time frame than lower time frame order blocks. Back to the 15-minute chart. Now look, we are reacting slightly off of this demand zone, and we've had this break of structure. However, in the longer run, we are still bearish. We have got those breaks of lows. So we are looking at essentially taking this right down. But in terms of those trades I took earlier, the one that hit 6.87R, the reason my target was at this level was because there's a demand zone here, and looking at my 15-minute, we could be playing off demand. So I want to be targeting the recent demand. But if the demand failed, for example, so for example, if I had this 15-minute, this move happened and it broke through the demand, then came back up, then I would have targeted the low. But in this case, as you can see, we've come straight back up. So it's kind of a sticky situation because we could look to just break highs now, potentially, if we don't look to target that demand. This could essentially be an inducement. We've just been talking about inducement, so I mark inducements up as liquidity. Demand is kind of still in play, but overall supply is still in play. But short run, you could look to take this trade. I personally wouldn't. Reason being is that I like to stick with my bias. If I generally think that market is going to continue downwards, because I stick with the higher time frame bias. So on the 4-hour, we're very bearish. So 15-minute, we're also very bearish. So there's no reason for me to be taking random bias. But I do still consider these shorter term trades. However, I wouldn't be looking to enter in this one, for example. It's just the fact that this happens. It's just the setup's perfect, except for the fact that the higher time frame is telling us opposite. And you do want to look for trend trades. It will increase your strike rate highly, because if you're constantly trading with the trend, you're only going to lose one trade every time the trend changes. If you're in a bearish trend, every time a new order block gets formed, it retests, you enter off of it, new order block formed, retest, get an entry in, keep going. There will be one time where you have an order block formed, it will break through your order block, and because the momentum of the market has changed, you are now in an opposite trend. So for example, I could take a sell off here, new order blocks could be formed there, another sell, but essentially once, for example, let's say I'm planning to take a sell off here, once this goes straight through and breaks that supply, you now have a supply to demand flip. So now you can start looking at demand, but of course you need to have that higher time frame align with your bias. So yeah, that's the importance. You just need to be very careful. So let's keep going. Let's take one last trade and we'll call it a day. And we'll just talk about the results and things like that. So we'll consider this trade. However, I am really inclined to see whether the market can get back up here. There's no reason why it shouldn't, but there's no reason why it has to either. So my trade would look like 6 pip stop. I don't trade 6 pip stop. So although this may play out, the stop is too wide for me and we've already got our range forming. And there you go. So our target would be really low, 3.25. I don't trade any risk reward which is less than 5 anymore. So yes, this might play out, but yeah, it didn't play out anyways. Now we could look at this. We could say that this was an inducement. Again, this is on our 1 minute time frame. Enter off of rounded numbers. So 80 would be where I look to enter. Stop loss around 7 pips. Target. Now this is a bit nicer risk to reward, 4.36, but still not amazing. You could have a re-entry in there because we broke that structure. And that's why we need to be careful. There's another order block in here. This would have been the trade. When anyone tells you in terms of my strategy, enter off of the extremes, this is what we mean. Enter off of the extremes, enter off of the order blocks that are formed near the highs and the lows, unless, for example, this area would have been a valid order block because it was the order block that caused this break of structure. So yeah, this could be a valid trade. 6.5 pip stops, I'd say. Target simply just at this recent low, reason being we are climbing up, but essentially we could target there if we're being ambitious, a bit ambitious. So let's just see how it plays out. Again, even if we did target here, it wouldn't have played out. So now this could still be a valid trade. Reason being, I put my stop there, right? I put my stop there rather than taking into consideration these highs. So if I took these highs into consideration, yes, I would have a 9.5 pip stop. Again, wouldn't have entered in that because of the stop. And I would target down here still. So technically, we still would be in this trade, but again, I would never entered in this trade in the first place. So we'll just see how this plays out. See, it wouldn't have been a trade worth entering anyways, because this would have spanned over a couple, maybe a day or two. We look to get in and out within maybe 10, 15 minutes, up to 2-3 hours most. Yes, you would have made your money off of this trade. But really, you want to be do you really want to be trading for? We haven't even hit take profit yet. This is 4 hours. You don't want to be in a trade for 4 hours. News and everything can impact it so much. So overall, this trade would have been 4 hours and 39 minutes. Do you want to be in a trade for 4 hours and 39 minutes to make 4.39 R, 4.26 R? No, you don't. These trades lasted maximum 10, 15 minutes and we made 26.6 R in the span of 2 days. Yes, this was 6th of May. And take into consideration, it's at the end of our trading hours. And 6th of May, what day is that? I'm just going to double check the day that was. 6th of May. Again, another key indicator. It's a Friday. You never want to trade New York session on a Friday because that's when the banks start to sell their stock. So you only want to trade London session on a Friday. You can trade London and New York on Monday to Thursday, but Friday you only want to trade the London session because that's the early morning session. That's before banks start getting into play properly and the volume's still decent. So there we go. That summarizes. This obviously wasn't a trade that we marked out. That summarizes and concludes our call. Do we have any questions?
Not for me.
Antonio, do you have any questions?
No, all good, bro. All good.
Okay, perfect. So yeah, it's just simple case of this sort of thing. I have sent this journal in the market chess chat, so you can make a copy of it. Feel free. The only thing you can't do is remove our logo, even though yes, you can do that, but it is against our copyright laws. But you can use this journal. You can make a copy and you can delete the information. So you can just highlight that, go back, and that's it. You can try backtesting using this journal. All the mathematical stuff is done, all the coding is done. So this number will automatically generate from when you input this stuff. It will tell you your wins, your losses, your break evens, total profit and loss, and your strike rate. So it also tells you the number of trades you took and over how long you took them. So from the 5th of May to the 6th of May. So 2 days, 26.6%. Name me another strategy that can do that. That's not a scam strategy that actually works in real time. I don't think you can name any. But yeah, that's what we do. Hope you enjoyed today's call. And I will catch you hopefully tomorrow for the weekly market forecast. Next week is looking really, really clean. Honestly, we've had an amazing week, especially at Market Chess. If I believe you're both members of Market Chess anyways. So I think we've hit around 25 R just this week alone. Next week is looking like that kind of a week again. So we'll see how it goes with the signals. So catch you guys later then.
Sweet. Take care, bro.
Amazing stuff. Catch you soon, bro.
Perfect.